Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
My name is Steve Vetterl, soon to be the guy that posts an AP social. So I'm not sure if you guys have the link to this. If you do not have the link and you need it, let me know. I could drop it into the chat window. This is the little bit after 10 a.m. Pacific time, weekend Forex strategy, risk management, all kinds of fun stuff. So if you can see my screen and hear me okay, just drop something in the chat window. I'd appreciate that. What I have on the screen here is the AP social room. You know, this is essentially the news feed. I gotta tell you, I really love this. This is so easy to use. And we're starting to get all of the developers, all of obviously the different coaches to post in here as far as the news feed. And I think this will be great. Instead of having, 25 Telegram channels to subscribe to, it's going to be good to just have this. Let me just, so when we actually start to kick off, which I think is going to be Tuesday, is when we go live. I'll actually post something in this room, but, go in, set up a profile for yourself, put an avatar in if you want. The everything essentially is going to be here. So I think that it's going to really, from a risk management standpoint, really pay off if you guys get associated with the social, right? And Josh and the team did actually a fantastic job with this. So hopefully the recordings, and it'll take probably a little while to iron out, smooth out recordings and all that, but you're going to start to see, like, for instance, with my Market Watch channel, which you could just click on, tells you a little about the channel. I can actually go in and adjust this and change everything around. But as far as just the groups, for now, we have the Market Watch group. You can subscribe, have everybody friended in here, just like you would in Facebook. I mean, this is the cake to use platform. I think everybody should get on it. It'll just make it a much more collaborative community, kind of like you see in the most collaborative right now by far is the Arrow chat window. So if we can get that kind of collaboration moved onto this platform, I think that would be good. So Forex Factory, and welcome to, we got actually a fair amount of people on on this channel. So it looks like we're starting to get a pretty good migration of subscribers to listen to the calls. I'm squawking from the mountaintops all the time. Really, the bottom line is, from a risk management standpoint, guys, it's just at the very least, listen to the recording of my Saturday call and your developer and or developers calls. You could probably buzz through most, if you don't have the time, most of these presentations within, I don't know, 25 to an hour. I'm gonna have an idea of everything that's going on. There'll be a little bit of overlap because we also need to talk about the news, but I cut right through the news, where some of them spend more time on the news. But in any case, let's talk about the calendar. So as always, our happy Windows calendar here, which I prefer. We get the 5th through the 11th. Now, next week is probably going to be the first week, I could be wrong, the first week that we start to see volumes pick back up, okay? Now, it is a holiday week, at least as far as the United States. We have Labor Day on Monday, which typically makes these days slower. Can't say that's going to be the case as far as volumes in Forex or other places to trade. But it'll start to probably pick back up. So I think now more than ever, the summer doldrums, if you will, just because of lower volumes, it's going to be critical for you guys to be paying more attention to what's going on, right? A lot of currencies are coiling. I've been talking about this for months now. Some of them are just going to break and run. Can't say when, how long, these are all crystal ball stuff. And as I always joke, my crystal ball's in the shop. But I think everybody on their teams can do your all selves a favor. And if you don't, or you get into the Chiefs to see my calls recordings, communicate to the team what I'm talking about. Okay. So we have the finishing up of August. What did we learn essentially as far as August, other than low volumes? Is that the U.S. dollar has reversed itself. Okay. So as you're looking at some of the news events coming up, just focus on the red folders. So you can see the holiday here, especially North America. It's the holiday for Labor Day. I always get Labor Day and Memorial Day mixed up. One of these days I'll figure it out. But they flank both sides of the summer, essentially, for those not familiar with it. The Nothing's going on Tuesday. Wednesday, the Seed Bank of Canada's rate statement. This is probably a great time to mention the following. The most developers have already turned off a lot of their CAD-based pairs. I certainly would not have them running on Wednesday. Monetary statements coming out from, but it's basically Canada Day as far as news events. ECB press conference, this certainly could be fraught with landmines. So just be aware of this as well. And then more CAD-based stuff coming in Friday. So if you look at the previous week, what you can glean from that as far as the U.S., September 4th was the non-farm, it's basically jobs, right? They thought it was going to be 720. It came out to be 235K. That's a dramatic change in terms of expectations versus what actually prints. Okay, what do we take from that from a risk standpoint? Well, I certainly think that the China virus and all of its variants, Delta, whatever the hell you want to call these variants, are having an effect on the economy again. How long it lasts, to what depth, if any, that it has, I don't know. Was very surprised, at least yesterday, for what it's worth, in my small slice of Temecula wine country here, which is usually an absolute mob scene on the holidays. There's just like 45 wineries out here. It was totally dead yesterday. So, understand that volumes should be picking up, but there is enough in there with transitory inflation and problems with central banks not being aligned. At least they would disagree with that, but we certainly think that on the street. And a potential slowdown again in the rocketing sort of back to workness that we've seen with the jobs and or all the other metrics out, with the exception of inflation, could be cooling off pretty dramatically. So I think that in and of itself, along with the summer ending, can't be bigger reasons, in my opinion, to start paying closer attention to what's going on with the charts. So let's do that. Move over to the charts. DXY daily. For those that are not familiar, this is tradingview.com. Each of these candles represents a single day red up or green up, red down. 10 days we're looking at here of a reversal off of a very big area on DXY. You can go to many charts. This was a big area, but talking about it's almost been annoying how much I've been talking about this, and it's reversed right on this level. Right on one of these touches the Bollinger Bands as well. So we're sort of back into the muck of the balancing area. Probably make a test of this lower area. So it'd be interesting to see, at least from a short-term perspective. Arguably, you could say we sort of bounced off that already, but I think really when the volumes start picking up in a lot of stuff, right? And I'm not just talking about Forex picking up in commodities, bonds, obviously equities trading globally, you begin to see really what's going on, right? You can only paint so many pictures. You ruffle enough bushes, lots of stuff's going to fall out or fly out, right? And that's what I want to see happen. So we don't really know what kind of ground we're standing on. So stay tuned. I'll have more, hopefully, quality commentary on that, and not incorrectness, as we can never get this stuff right. That's one of the big problems with being a prognosticator. You can always be wrong. So just remember, you always want to think about, hey, what did Vetterl say this week? What are the reasons he could be wrong? Sort of like a counter analysis, right? Euro USD. So this is more of sort of like a an opposite of this as the dollar's pulled back. Same 10 days we've seen strength off of what was, in my opinion, the edge of the cliff right here. So had the dollar rallied much further past the 93 area, I think we would have just seen this fall and just zipper through this whole area. Still a threat that we could do this. So do keep that in mind as you're looking at this. So I've spent so much time on currencies, guys, and I'm not going to this weekend. Hopefully that will encourage you to watch some of the previous recordings of the last few weeks, because every point I've made and hopefully some decent nuggets I've thrown out there are all still salient points as far as moving forward, and it's applicable to our current conditions, which should see an increase in activity this week. So Euro USD, GBP next, same thing. Still inside the upper range, been balancing in that upper range ever since we broke into it well over 6 months ago. Some point we're probably going to see some moves out of this, because arguably almost every chart pattern looks like this. We've spent enough time in this area. More than likely, we're probably going to see some breaks from it. And it's, as far as Brexit and everything in the UK, it's been very quiet, because obviously they've been focused more on the virus. Now we've seen the volatility here. Remember, I discussed a few weeks back this big rejection reverse on a couple of other charts, but here we see rejection reverse, hammer reversal, whatever you want to call it. It was a rejection of a much bigger line of resistance. So this is that fabled stop run I talk a lot about. So always trying to envision where the pockets of stops are, right? Because at some point in almost anything you would trade, there's going to be, especially if there's a proliferation of algorithmic activity from systems or high frequency, they're going to be going to these areas and chasing them down. And, essentially it's always that, you see all the stories all the time of, I was totally long, and I had a really good run, and then I completely reversed short, and I just got barbecued on my shorts because I didn't just sort of stretch the stops out enough, right? And my trade actually worked, but I wasn't in it. So just keep that in mind with a lot of these moves. There's a ton. I could talk for an hour just on this pattern. But if you want to, and you're actually set up an AP social, go into the live, I've brought every chart over from Telegram, because the guys and the executives, they want us to sort of get away from Telegram, which I think makes sense, because it could certainly be pulled from us at any point. So USD JPY real tight. Although I must say the surprise of the last week, I'm actually going to go to a FinViz to show you this. So check this out. Let's go to daily. We look at all. I want to make sure we're looking at daily chart for all. So look at the move in the Japanese equities markets last. I mean, that is, I know I say bananas a lot, but seriously, that is a bananas move, which maybe sloppily I could draw a trend line that, would go all the way down to sort of lay out to about right here. There's that sort of deadly doji I always talk about. As soon as a couple of, they were just coiling to run stops, we had a downtrend line that broke, and then they just absolutely ripped it. So, and that's a 3.5% day for a stock market. One of the crappier ones globally. Just looks pretty good now, doesn't it? But historically, compared to the other stuff, so that's a pretty big move. So I'd be a little nervous, a little more so nervous, trading anything that's yen based manually, just because of this move, right? Maybe there is some underlying things that took the market by storm. I could tell you from the standpoint of just standard deviations on a daily chart, which is real rare for Japanese equities to hit that, we blew right through it. So if we take a look at the same chart, actually I don't have that loaded on here because I prefer to compare all these against each other. But just looking at all the indexes, and we scroll all the way to the bottom, we can see all the currencies. Again, this is just a daily chart. So I always like to take a look at the comparisons of what's going on, right? So we got essentially our 8 majors, and then all of the relationships between each of these others. But the point really is trying, just from just a broad perspective, is that 10 days down on the dollar, right? 10 days up, a little craziness here, but more flag looking. Pound up, right? Canada up, maybe a little less. This is difficult with the Swiss to gain any sort of comparison. It's a little more volatile, but again, AUD, and then the biggest up of the entire week's been NZD. So as I've heard some of the comments from those trading the variety of NZD pairs, mainly the GBP NZD, and the thing's just been on a rip. So this is a great example of, if you caught the bottom, well, I always want to let your runners run if you're a multi-day or a swing-based trader in Forex. It's a great example of that. So USD CHF, nothing really going on there. AUD USD, so I showed this in a different perspective on that FinViz. And for the question I just got, it's finviz.com. This is a dashboard. I have 90-year-old clients that understand how to look at this, but it's just for like general perspective of what's going on in either correlated or uncorrelated markets, right? Correlated meaning running together, uncorrelated meaning technically running opposite. But things of note last week, commodity-wise, could bring some more volatility in. Look at that huge tick up in lumber, timber prices. I can't tell you how many people that were in the process of building something that all they complained about was the cost of lumber. When I showed them this chart, they were shocked. So basically they were getting their brains blown out where they were buying their lumber from, because they're still paying these prices when they should have been paying lower. Remember, this is a wholesale large board feet commodities chart, right? It's not what you pay at the Deep or Lowe's or 84 lumber or wherever the hell else you get your lumber, right? But I think of note as to sort of, I'm always trying to peek underneath the cover of something to find problems one way or the other in markets, right? And this one and copper have really just got me perplexed as to what's going on. They're like, oh, there's chip shortages for this and that. NVIDIA's going to the moon, but why is the price of copper? Here, I'll show you the metals. Why is the price of copper just not on the moon, right? It's been very erratic. This is that shortage, obviously, that showed up, and then we're starting to tick back up again. So, as I get off track. All right, so I think I've addressed everything I want to here. Back to the charts. CAD CHF, just a quick peek. Back again inside the chop and broccoli area, as we call it. CAD JPY. There's the pound franc. For somebody just asked me a question, nothing going on. We're still inside of a tight range. GBP NZD. So there's that break. Where do we be on this too? So this is a big area. This whole area from 84.70-ish all the way up to 86, 60-ish. It was sort of the edge of the cliff, and typically if you spend enough time, not always the case because it's a little more murky to make this statement in Forex, but typically if you spend enough time against a resistance point and it will not break through it, usually, can't always say, but usually it will go and completely go across the whole spectrum down and try the bottom again. How long it takes to get there, how much time it spends there, if at all, those are the unknowns in this, but typically, statistically, it'll go back down and test the other area. Now, I think that if in fact that's the case, the problem in currency land is it's like a bowling alley. I've made this reference in maybe not the best analogy, but I consider pin one, the front pin, whatever the hell I call that pin in bowling. I consider that to be the main pin. So how that pin is hit one way or the other, the energy of that pin into the two bins behind it and the three behind that is essentially the currency markets, in my opinion. Sometimes the pin will just, get whacked off and won't have an effect on the other. I don't know how many pins are in bowling, 20. I have no idea, 13. So all the pins knocked down. So understand that I always start off with DXY and or an understanding of what's going on monetarily, central bank, Federal Reserve-ish first, and then move into every other currency after that. Primarily starting next with Euro USD and GBP. So from just a chronologically how I attack the analysis, there's a reason I do that. So if we go back down to GBP, go back to daily, set the scale, we have broken out of a very well defined, very well balanced. Now we're beginning to auction lower. Hang on a second, guys. I got UPS banging on the door. I'm going to answer this. They don't never drop off cigars without a signature. It's ridiculous. Hi. Yes. Is that the cigars? All right, cool. Can we leave something on the door in the future to, yeah? Because, I'm always getting cigars from these guys. So. Oh, okay. Yeah, no, that's cool. Thank you. It's Vettorel, Vettorel. Yeah, just over there in the corner, so you can't see it. Yeah, yeah. Because I work out of the home most of the time. So, thanks, brother. All right. Finally got some damn cigars for the holiday. All right. So back to work here. Yeah, I know, Nick. It's funny, right? I think clients get a kick out of it when I answer the door because I'm always getting FedEx and UPS envelopes with different client stuff. So anyway, that's great, guys. I'll tell you. I hope they're getting paid well. So the British pound, so I'm just saying we're breaking out of this. So when we break out of a defined balance area, trading, trending sideways, whatever you want to call it, you have a lot less, let's just say I have a lot less feel for where we're going to go, right? We'll go down in many cases and test another area. When you see these typical orange lines, this is a big support, right? So more than likely, we're going to go to this area. What happens when we get there? Maybe we'll bounce for a bit. Maybe we'll blast through it. All depends on really what's going on in the UK, in my opinion. So just know that for the question I just got on this, I know this can be a real treacherous currency to trade and or have a system trade for you and or accept, requests to make trades on this. But just know that once we broke out of this right here under this area, there's no way, I don't care how good the system and or the person bringing me the trades, unless it was a real short term, overextended thing at least. But from a daily perspective, there's no way I'd ever accept long trades on a big break from this. The longer the balance area, the more likely we're going to just roar out either down or up when you break out of these zones. So the only thing I want you to take away from that generally is that the longer the balance area, the more solid it can be as a break, either support or resistance wise, right? But also from the perspective, as I'm always thinking about stops, right? The bigger the pool of stops, in my opinion, that is on both sides. So there's a chunk of stops up here. Who knows? Maybe JP Morgan's got, a monster limit order out there on just above this 2 area, right? And maybe there's just a bunch of stops by other institutions down there. So, I always hate leaving these kind of orders out there because, in my opinion, you're sort of a sitting duck for the stop hunting algos. They're going to come in and chase you around. And I don't want to be that guy. So if we break from it, right, then we're starting to rip up and maybe you're short a huge chunk of BN, then you're going to want to put the stop in and take some risk off with the bigger position you have. Same thing to be said at the bottom as well. All right. What else do I want to address? Gold. Pretty good day here. So we're starting finally to poke our head above what is a big resistance area right under 1830-ish an ounce. Notice head pokes actually been a pretty decent place to take a short-term short, but we finished underneath it. So a lot of times what can happen, especially in the more volatile commodities like an oil or a gold, is that we'll come up. Remember these, as far as the squeeze zone lines, the Stans indicator has been spot on in its effectiveness. So I put, unlike a lot of indicators I have, with the exception of market profile or volume profile, this is about my second favorite of all of my indicators because it has been rock solid in its formations. So orange being stronger typically than red, not always. A grouping or some sort of aggregate of these right in a given area on past patterns gives it even more strength as far as a resistance or a ceiling holding things back. But we always will poke above it. For those short gold, I'd be nervous right here because typically when you poke above and you finish underneath, the stops, because all the inexperienced traders, there's a lot of very experienced traders in gold, but there's a lot of inexperienced as well. They're seeing this like, oh yeah, we're just going to spend some time and balance in this area. Whereas the smart money is like, more than likely, we're going to go blast this whole area in the next few days. So the larger the grouping of shorts that are out there sort of hanging out like sitting ducks, in my opinion, if you will, the bigger the zip. So, but ultimately for all the guys on television that sell all the ridiculous gold bullion stuff, they really want to see this 1900 area. I mean, they are dying to see the big. And then ultimately, if we drop to the weekly chart, right above, right under 2100 an ounce is it. So after this, we get above this area. Can't say we will. I think we should. We are just going to blast. More than likely, we'll blast straight to 2500 in a relatively short period of time. So again, Steve could always be wrong. You want to think about that when you look at these levels, but it's just a general idea of what I think could be going on. Do note that this 1957, 1960-ish area an ounce, big resistance on the weekly. So we could go up if we blast. We could go up and zipper all the way to this area. And they're more than just the indicators that you see here. I've got a whole bunch of other stuff that you need to kind of look at GLD to see. But if you just take a look at the volume that's traded on GLD, this is the big gold ETF. It's super accurate in terms of volume. Look at where the support line is coming right across the center point of control line. From a volume standpoint over time is measured in a big indicator of the solidness of any pullback. Notice we looked under it, finished right back above it. So this is a solid area of support. Should anything real big happen, pushes gold down in this area, we'll actually probably be buyers for clients in the tune of maybe upping current allocations 2 or 3%. Can't just talk about currencies all the time, right? You got to talk about other stuff. Because this is certainly tradable along with all the indices, which has been, a loser's game, as you can see just looking at a chart. So for those that trade the S&P and MT4 land, depending on, whether it's US 30 or DAX, you can see what's going on. I mean, we're in a very defined trend up. We've had our correction, which took place during the pandemic, and we moved back up. Let's take a look at NASDAQ. Somebody asked me about that. This is in the nosebleed section. Keep in mind the movement of most of these top 100 NASDAQ stocks. And what represents the movement of this is, Zuckerberg and the idiots at Facebook. And then you have Bezos and the idiots at Amazon. and then Nvidia and Microsoft, Intel, all the big dogs that are players, including Apple, up in this area. Do note that for those out there that are real heavy in Apple, since I've had some questions on this, Apple hit a double, not only a monthly but a weekly upside to mark, what's called a sequential 13, which is just a really sophisticated way of saying that it's really overpriced on even the longest of time frames. So depending on your tax situation, you may want to consider peeling back if you are really heavy in Apple, because it is hitting all kinds of upside exhaustion points. All right, what else I want to see? US 30 for what it's worth. No new highs. A lot of the breakouts among some of the best stuff, and you guys will see a lot of this IBD stuff from me. It's Investors Business Daily. It's actually one of the best newspapers in the whole country, in my opinion. Better than the Financial Times, better than the Wall Street Journal, which is junk. Better than Barron's, which is crap, and all the other magazines in the industry, because these guys are, they saw a lot of the research, and they are loved by institutions and hedge funds because they're one of the best databases in the entire planet outside of Morningstar. So anytime you ever hear me say anything about IBD, Investors Business Daily, they actually put a print newspaper on your driveway every Saturday morning. It's real good stuff. All right, so I'm sort of all over the place here, but I wanted to get into some crypto real quick. And we have the Bitcoinage on a daily time frame. So you can see we spent a fair amount of time on a long base throughout much of the spring and summer. Broke out of that base, right? Slight pullback. Technically, this is a sloppy cup with handle pattern, which is usually a break higher. A lot of favorable news, obviously, about the institutioning, if you will, of crypto by countries and stuff. So let's push this up into this range. But now we started to build a tight base. And it's looking like the neckline, if you will, of that well over 4-month previous head and shoulders pattern is real resistance at this point. So where it broke, probably hard to see what a neckline looks like, but it's right in this area. It's serving as resistance. I think ultimately what I would like to see for anybody that wants to be a buyer long term is this to trade back down where it originally broke from, right around the first of the year. I think this would represent a really good long-term potential buying opportunity, depending upon what the patterns look like as we move into this area, if that happens at all, right? I guess if I was going to be some shill trying to pump this on Twitter so I could get tons of followers in crypto space and open up my own rotten brokerage exchange and try to get on CNBC, right? I would be touting it would to be going to 100,000 or 500,000, as some have said. Notice how they were emboldened here, but everybody's crying like spilled milk. Or ice cream cones fell off at Disney World, right? They were all crying here, and you weren't hearing any of that stuff, right? Now all of a sudden it's peaked up again. So just don't make the mistake long term and anywhere in your life. Don't make the mistake of the person that's buying here, right? You want to buy low and sell high. But the problem is that is almost 100% counterintuitive to how the human brain works. The human brain emotionally gets, flipped out, especially if you're an owner up here, when prices drop down here. This is when, if you think you're going to be a long-term holder, right, this is when you should be averaging down. It's one of the few times then you should be averaging down if you can afford it, if it is not too big of a position as far as your portfolio size, right? So I don't care how rich a client is, it comes into first down and our other firm benchmark that, unless they move in to our management with a highly appreciated position that's already inside the account, let's say somebody's coming in with cash, no rollover from 401k, we'll never ever put their accounts. I don't care if it's 200 grand or 20 million, they'll never be more than 3 or 4% in any position. So why should somebody be any different from how historically a quality diversification is put together in a client's account, right? But yet you'll see people routinely out there, and I have we've sort of disconnected because he wouldn't take any of my advice and he hated admitting he was wrong because he just couldn't leave his ego at the door. But I have a chiropractor friend that just was ridiculously overweighted in Bitcoin. At one point, his Bitcoin position was worth more than his entire chiropractic in his house. And I kept telling him to peel it off, peel it off. You're gonna get just clobbered. And he was wicked levered in the account. So I mean, this whole thing it ate him hard. He also took the same hits in it in 17 when I told him to get out of 20K a coin. And then it just crashed over 3 years and spent a whole bunch of time right around 4, which I guess in hindsight, I should have just shut up and bought it, right? This is a great buy point down here at 4 inch. Look at the weekly chart to see it better, but this was the area essentially to be a buyer. Down here. Well, not long ago, by the way. So there is a chance that we could revisit this area. I hope for the sake of anybody that is ridiculously overweighted, that is not the case, right? But those that are in cash and or waiting to pick up anything in crypto, and it doesn't necessarily have to be this one. I mean, look at the chart of Ethereum. Now it's much closer to an all-time high. I think a lot of this is short-based barbecuing that's going on, but ADA, which is the new guy on the list, if we go back to the daily, it's beginning to put in a balance to potentially move higher again. But the problem is all it takes is just 2 or 3 comments from central bankers, and Elon Musk opens his mouth, a bunch of others, and boom, this whole crypto thing can just drop in half. And that's the problem with this whole thing, in my opinion. It may be great, but the fact that so many institutions, and I don't care if you're talking to Jamie Dimon at JP Morgan or whoever else at Goldman Sachs, or, make up the name of the firm in the UK or Europe, they're not embracing this. Now, obviously, no surprise, many of them are the big banks and they run all the money, right? And they hold all the political clout. But, at some point, you just got to, this used to happen a lot in the old days, which was like 2000 through 03, which was an absolute treacherous time to be trading tech stocks, especially as a U.S. resident, because you'd routinely wake up every day and there'd be another scandal. Remember Pets.com when that thing completely exploded? We had a big client that just wouldn't take our advice. I was actually a rep at Fidelity at the time as an analyst, and we're like, look, you need to get out of this guy. Like $5 million in Pets.com, lost the whole thing because it just wouldn't take and put risk management first. So I think I've covered everything. Enough swapping from Federal. Let's all get on with our Saturday, and wish everybody a great week. Be nice, be kind. May the trades be with you, folks.